Now, before we get into it, I'm just going to go rapid speed to explain a few things.
The Finsightful YouTube channel provides educational content only. All information shared by Finsightful, Matthew Brown, Nathan Moss, or any guest reflects personal opinions and is not financial, investment, tax, or legal advice. Viewers should do their own research or consult a licensed professional before making any financial decisions.
Okay, rapid fire over. Let's get into it.
Hey everybody, welcome to Tuesday night's market scan. Matt Brown here from Finsightful. I hope a lot of you enjoyed the war room over the weekend. I know Colin was doing a lot of teaching at that particular event, so lots to learn from there. He's a great coach, really successful trader. So I hope you all got some benefit out of that. Has everyone been enjoying the epic amounts of volatility that this Middle East conflict has been providing for us all? I've basically have had to put a couple of trades on yesterday afternoon because after I did my Monday market scan and posted that up, I did a video actually. I might just So this was me yesterday. And so I took my own advice and I filled up my bags a little bit. And it was a quite fortuitous time because I actually thought that the conflict in the Middle East was actually only just starting. And I really didn't foresee a peace treaty or a ceasefire come into play literally 24 or 48 hours after the US drops bunker busting bombs all over Iran, and the Israeli Air Force was going ham over there. So that's really great news. Hopefully the Straits of Hormuz does not get closed by Iran. But if it does, the only economies that it really hurts is like India and China, because they're predominantly the majority of the oil that comes out of those particular straits there goes into the Asian markets. And it also hurts Europe as well. So a lot of that oil gets shipped out of there, going to Europe now that pipeline, that LNG pipeline between Russia and Europe was broken. So very, very interesting. Let me just add these people in. Anyone had any successful trades or anything that they want to share from the last week? Was that a mumble? So someone was about to say something? Just unmute yourself and then jump in if you do. All right. Okay, so we've had a really successful day of a recovery from the weekend's turbulence. Literally, everyone was getting long oil. Everyone was getting long gold. Bitcoin had a bit of a sell-off, but public markets, nothing happened. It's just a normal trading day. Like nothing really had an impact on shares at all. And so if you have a look at the last couple of days, like there's literally not. It was an absolute nothing burger. So can you everyone hear me clearly? Yep. David, am I coming through clearly? It's all, yep. Okay, awesome. So yeah, it was just an absolute nothing burger, and we just really didn't see any type of sell-off at all. If anything, we just saw a lot of the companies who produce a lot of these weapons prices go up significantly in all those defense style stocks. And crypto is completely recovered. So we're down on the week a little bit, but Say is absolutely just flying. That is what's going on with them. They're up like 40% today. Yeah, so I'll have to have a look at that. But yeah, everything's up. So, but in the last week we still had that sell-off, and the market is still in a bit of a decline. But as you can see here, we have moved out of this sort of that below 40 complete fear, and we're sort of back in this neutral sort of area. And so this is good for us to be trading, but the market is very, very choppy at the moment. So big days down, big days up. Let's do that. Great. And so what we've got here is, let me just have a look. So I usually start off having a look at the global markets and the price of the US dollar and so on and so forth. But this is the price of gold. And so gold is on an absolute tear. It's been trending up significantly for a long period of time. Actually, let me just draw that again. And so what I'm doing here is just drawing a chart. Like, so if you look at the gold price, it has been just absolutely tearing away in this uptrend here. And so imagine, so gold is up, 100% from 23. And when you think that it doesn't pay any income, it doesn't have any real utility, or it does have some utility in electronics, but this is really just a flight to safety and a flight away from the US dollar. But what I thought we would have seen through here, when we have when we have the US typically going to war with another nation, we typically have a significant flight to safety, and gold price would spike. But we actually saw gold price sell off. So from the weekend, gold price has actually sold off, and it did have a bit of recovery today, but it sold off significantly. Silver the same, but more importantly, the price of oil. So when we're having a look here and we're looking at the price of oil, and so these are just oil prices, oil futures prices, rather than looking at each contract. We're actually just putting all the contracts in together and having like one steady flow chart. And so oil prices, so since the Middle Eastern conflict has sort of kicked off, we have seen a significant increase in oil prices. So it's basically a 50% rise. So we had lows down here at $55 a barrel. Right. We had highs up here of 170, 175. But on the day that the US, that we have some kinetic conflict with the US involved, which should have sent the oil futures price sky high, we actually saw oil price sell off dramatically. This is like very, very counterintuitive. Anytime there's any type of issue in the Middle East at all, because they are one of the largest producers of oil in the world, you typically see oil prices skyrocket. My take on this is that oil prices didn't go up as expected, because when the US was targeting Iranian nuclear sites, and this is for their enrichment and for their nuclear power, not necessarily to create nuclear bombs or weapons of mass destruction, I don't want to get into any of that, they specifically didn't hit any of the oil production. So none of the oil refineries, none of the oil rigs, none of the pumps, none of that was hit at all. And this has been something that all of the militaries that are currently in conflict in the Middle East have not been doing. They have specifically been not targeting any of the oil production. This is in the Syrian conflict that we had. We have new political leaders in there at the moment, as when Assad was kicked out. And the same thing in Iran. So I was expecting this price to go up significantly. I did not expect this to sell off. Also, one of the points that globally that we were concerned about in Iran was Iran closing the Straits of Hormuz, but they also didn't do that. So all the things that would have actually sent oil prices to the roof haven't. And then the big benefit for the rest of the world is that oil prices have a massive impact on inflation. So if oil prices spike from $50 a barrel and get back up to these type of prices up here, so we're looking at $100 a barrel, so $100, $120, $130 a barrel if you have a look up here, this means that all of your energy production is 3x. And oil is basically one of the primary drivers of inflation. So we really want to make sure, globally, we want cheap energy, because cheap energy enables us to, cheap transportation and everything, either ourselves personally, all the stuff that we buy, all the things that we do, rely heavily on petrol and oil production, oil pricing. So this has stayed at relatively low levels for the conflict that we've had at hand is in my opinion like a fantastic result for us all, because we definitely don't want to see inflation spiking in the US, and we most certainly don't want to see inflation spiking in Australia, because the result of that will be higher interest rates, and there will be the economy will restrict even more, and the economy is sort of limping along at the moment. Speaking with a lot of my clients end of financial year, it's been a pretty rough year for most people, I think. Interest rates are still high. People are not spending. So yeah, a lot of businesses have sort of struggled. So they're wanting interest rates to continue to decline. Okay, and so again, like the VIX, just a nothing. Like I cannot believe this. So last night, the VIX dropped off. It's amazing. It's completely counter intuitive. USDT dominance. Again, we saw a lot of buying yesterday. So typically what you see when the markets drop, you'll see USDT dominance increase. But yesterday we saw a lot of buying happening. And so USDT's come down, and then therefore that's why you've seen prices go up as much as they have. Bitcoin is just the chart I want to look at. No. So total market cap again sort of came down here and sat around about that 3 trillion mark. We really want to see this 3 trillion to be a line of resistance of the overall market cap of the total crypto market, and we need to see it sort of start to trending with that green line if we're ever going to hit this sort of 5 trillion or 10 trillion market cap is what a lot of people were sort of estimating, and myself was estimating for this particular bull run. That just hasn't come to fruition. But to get Bitcoin prices of 200,000, 300,000, 500,000, we're going to need to see this market cap significantly increase from here. And at the moment, it looks like it's just consolidating again. So that's all right. And so, like I mentioned, in the US, the US markets went up on Monday night, coming out of all of the information over the weekend, and that is a very, very counterintuitive move. What else did I want to talk about today? That's about it. All right, so who's got some coins that they want to analyze? What does anyone have?
Before you go to coins, Matt, I just got a silly question for you, mate, if I could.
Yep.
Fear and greed in coin market cap is 47,
Yep.
but on Bybit it's 65. Why such a big discrepancy?
I'm not sure. What is where's Bybit getting their information from, or where we need to check where they're both getting their information from.
Right, okay.
Let me just have a quick look.
Just meet him in the middle.
I'd have to check with Bybit to see where they're pulling their data from.
Yeah, because that makes a big difference with which way you want to trade, wouldn't it?
Look, yeah, like I don't necessarily use this fear and greed index as a major barometer in terms of whether I'm going to be getting long or short. I do use it from time to time just to get an idea of what's happening in the market, but also just having a look at the banter bubbles and seeing like where we're at there. Or mate, just you can tell what's happening in the market by just looking at the daily or weekly Bitcoin price and how much volume's coming through and where that volume is actually pushing price. But what I do like with this fear and greed index is when we are hitting the greed index above 80. That is definitely a signal for me to look at starting to take profits, because every time it hits this, so I've just got on the 30-day. Every time we see this extreme greed hit, we have a significant market sell-off. And up here we have significant market sell-offs at those particular points. What we want to see this fear and greed index around neutral, which is where we've sort of got it now, and we want to see the Bitcoin price heading north, because then it's sort of moving at not too an aggressive price. It's just slowly edging further and further north. So that's sort of what I'm looking at. Or again, when we're seeing this extreme fear, when everybody is selling, it's typically a signal that we're going to see a price return. And the fear and greed index that we have on the crypto market is very, very similar, or is what we look at with the VIX as well. So when you're looking at the VIX on the S&P 500, when you see these extreme prices in the VIX, that is when you've seen probably the maximum or extreme selling happening, and then as the VIX comes back down, prices tend to recover. So these big spikes. And so anything over sort of 45 or 50 is high. And then at a normal level, you're sort of saying anywhere between sort of 25 and anything around this 15, 16 is very, very low volatility. So that's just business as usual in the crypto markets. In the S&P 500, in the TradFi markets.
Fear and greed index, because maybe Bybit's going off their own data, volume coming in, volume going out, and it's based off that particular exchange. So I think CoinMarketCap covers all of them, as Bybit's just specific to its own.
Yeah, so Bybit might just be looking at how many buyers there are across their platform. And then come out, but I'll find that out and come back to you with an actual answer. But what you want is you want the aggregate information.
Matt, also, I think that we've got a lot of on Bitcoin, a lot of below average volume. Unless where there's spikes, it's pushing above the 20-day moving average. But other than that, the volume is very subdued. So I think that there's a few people sitting on the sidelines just watching and waiting for opportunities.
So having a look here, putting volume on.
Yeah, volume of the 20-day moving average, or 20-period moving average.
That's that line there. So that's that blue line.
Yep.
So as you can see, as price is declining through here, we're getting like a very below average volume. But on the Monday, this is
on the pushes, it's there.
Yeah, on the big price pushes. Yeah. And what you're seeing is those reversals. So you really want to be having a look at those big volume days. That's the daily. So if I was looking at Bitcoin, so this week, what am I looking for if I was looking to trade Bitcoin itself? Well, so the first thing is, I guess, I did this on Monday and I sort of said, look, on Bitcoin here, if I look at it like this.
Sorry, Matthew. Is there any chance you can make that screen bigger, like screen share?
Like that?
No.
What do you mean? I can't make it any bigger. So you need to highlight. So if you on your screen, have you highlighted me on your Zoom call? Because the screen is like as big as it can be. It's my
Yeah,
entire,
okay. Yeah,
it's my
I'll have
entire
to
screen.
You keep going. Thanks, mate.
All good. Lost my train of thought. 1 second. So the first, so this is what I was looking at. This was Sunday. So having a look at what then happened on Monday. So let's go back to the 4 hour. We sort of had this downward trend, high, low, lower high, lower low, lower high, lower low coming through. And I was sort of saying, okay, well, we've got this longer term downtrend from this peak up here, or this all-time high coming down. So again, we have overall from our all-time high, Bitcoin has been declining in price, yeah? Or you could say it's sort of consolidating between this area here and sort of the 100. So we've got 108 or 110, 111 down to 100, and that's what we're sort of consolidating and bouncing around within this particular price. But I also sort of thought, well, on a shorter term, I really want to see this particular downtrend here broken, because we've had some sharp sell-offs, consolidation, a little bit of a price push, and then another sharp sell-off. So on this 4 hour chart, we definitely have a bearish sense of what was happening. And the PTS system was actually getting short all through here, which is good. We're making money through that. And I was thinking, well, for me to start to get long again, I really want to see price push up and then break at least this particular trend line here that we've got this down. And then so we saw that happen relatively quickly. This was the sharp sell-off. What's that? So this is our Sunday. That was a sharp sell-off when the US woke up on their Sunday morning, and they found out that they were had just been dropping bombs on Iran all night. So that was that sharp sell-off first thing Sunday morning. Let's 1 second. I'm just going to, and so this is Monday's price action. So I think I did my market scan somewhere around. I think we got to sell off again. Yeah, so it bounces off there. And then so this is the Monday up. This is the Monday. So we saw a break of that downtrend, and then we saw a daily high of Monday putting in here. Nice big push up. I didn't actually trade Bitcoin through here. Would have been good to have done that, but I didn't. But what I did is I did get long a couple of my other spot holdings that I'm continuing to accumulate. So I got some good upside on that. But the first thing that we need to do is sort of say, okay, so what is Bitcoin doing? Because that's going to be the market leader. And I say this week in, week out. So then from here, that downtrend is now gone. So away it is. And then let's just go back. And so this is where we're looking at the market as at today. So our daily high has held all through Tuesday thus far, and that's through the Asia market, and the London has just opened. So what I would suggest doing is, if we can't break above this daily high on the Monday, we could very well see a price come back down here and test the Monday daily low before it then heads higher again. And at the same time, be looking at this long-term uptrending channel. So I go back here. Sorry, everyone. Just need to. So from the beginning of this bull run, this channel has held, and so we've been monitoring this and following this for a long time. For a long time, and we have seen time and time again price come down here, test the lows of this channel, head back up, test the highs of this channel, consolidate, and then go higher again. Consolidate and go higher again. Now we've sort of been trending up on the lower side of, or the lower edge of this particular bullish channel that we have. But I can definitely see price continuing to consolidate all this week into this particular ascending triangle that we have, and then testing this, and then probably then with a push to move higher. If we see the Israeli and Iranian conflict ceasefire be extended, that will be very, very bullish news. That would be very, very bullish news for all growth assets. So definitely watch that space there. Just want to say we've got a couple of questions in here which I've got. So XLM HBAR, one second. Is this Vima's platform for trades and TradingView for indicators? So let me just go to the top. So sold. Okay, so no, I don't use Vima. I just use TradingView, and then I trade directly onto my broker, which I use Bybit and CoinStash. But Vima's great. Vima's really good if you want to do sort of swing trading, or you want to do your analysis and then put in a trade where it says, well, if Bitcoin does close on the 15-minute chart above that particular trend line, then I want you to enter long. And so whether that happens today or whether that happens in the afternoon, that trade will then execute, and Vima will then automatically do all of your journaling for you. So it is a good product. I just don't use it.
Does it have a trailing stop?
Vima? I don't think Vima has a trailing stop. That's one of the reasons why I didn't use it a long time ago, because I do love my first profit target and trailing stop strategies.
They've got it now. They've just added it.
But I was about to say, I think that's one of those things that they were looking to add. So that's on there now, but I can't confirm, nor did I, because I don't use it. Colin and Stewie swear by it, so they use it all the time. They think it's great. It's probably something I should go back and have a look at. Matt, I got a spot buy at 275. XLM. Notice sometimes that certain coins can move the opposite way to Bitcoin. Yeah. So yes, but not usually. Yes, dinner does have an impact on how long these things run, particularly after my wife is delivering a nice hot meal. Thanks. Okay. All right, that was okay. So Sonic. Sorry, I'm trying to catch up on everything. No, let's not do that. USDC. Why is it in USDC? Why is it not USDT? That doesn't have enough. Why have I done that? So what I'm trying to do is I'm just trying to find a chart that's got the most data on there for us to have a look at it. So Sonic, it's in a downtrend. If you have a look here, you definitely want to, so price is sort of just bouncing off this downtrend now. 1 second, let me just move that. Has shot back up here, but it's bouncing off. If you're looking to get long, then I would be suggesting you want to see this particular candle now, or definitely close above, and then what would I be doing? So let's have a look at. So 1 second, let's go. Having a look at our momentum chart here. Oh no, so having a look at our indicator here, you're probably seeing price get to an extended area. So if you're looking to get long, you probably want to see it pull back a little bit, because looking at this oscillator here, you could potentially going into that sort of overbought area. Oops. Yeah, so on my other RSI here, we're definitely looking at getting into that sort of overbought area of price here. So we want to see price consolidate a little bit before another big push up. But yeah, it was a buy right down here at the bottom. So this RSI that I have here is just a special one that I subscribe to. And it actually gives you sort of some pivot areas or where you should be looking at buying and selling. So yeah, this is really useful. I would suggest that this is going to tell me to take profits. If you were in this is going to come up and say pivot or bear relatively soon on here. So I'd be cautious. If you're buying as a spot holding and you think Bitcoin is going to continue to push higher and the crypto markets are going to roar away, then this is a nice, good low area to be continuing to consolidate or purchase. But in terms of trade right now, I would be cautious if you're looking at that sort of 4-hour mark. What else? Close your chat planes. One of the questions that I had come up in the community was on potential changes in trust law that they were talking about. Now, as an accountant and financial advisor, tax advisor, I don't overly concern myself with rumors about new tax legislation that may or may not come into force. Once we know exactly what the laws are of the land, then we create strategies that are going to adapt or take advantage of the rules that we have available to us. Governments change every 3 to 4 years, and some governments are more pro-business, are more pro-tax flexibility. Others are less, and they want to increase those taxes. Thinking about the utilization of a trust and or a company, you really need to get personalized advice for yourself to work out which of those individual structures or a combination of both of them is going to be best suited for your individual needs. And the reason behind that is because taxation rules are changing every year. They're changing all the time. The Treasury is always looking at how it can generate more tax revenue for the Australian government. And so both governments and the Treasury has been clamping down on discretionary family trusts for the last 2 decades. Yep. Back in the late 70s, early 80s, you were able to distribute income from a family trust to any child beneficiary. And that's where you saw wealthy families distributing, tens, if not hundreds of thousands of dollars out to children that are just, from the age of 1. And then they slowly reduced the amount that you could distribute. They slowly reduced the dollar figure. And now they actually have rules in place where they're saying, no, as accountants, you can't actually just paper distribute money. You have to actually make those physical payments. So if you want money to move from one entity, a company, as a profit distribution to the trust, and then from the trust out to Aunt Shelley, then the money has to actually move from the company to the trust to Aunt Shelley. Otherwise, you create what we call unpaid present entitlements and potentially some Division 7A loans, which is another tax, an interest cost on you not actually moving the money specifically. And if you don't then adhere to those Division 7A loan agreements, then you can get hit with a forced dividend being paid out to you. So that's a bit technical and a bit like in the reads on the accounting side of things. But I guess what the perspective that you need to have is like, I need to build the best, most robust structure that I can utilize here in Australia today. As things change over time, then we need to make sure that we've got the most flexibility within that structure to be able to adapt as things change into the future. And so that's just what we need to do. Another big change that the Australian government has done is they've really clamped down on the non-residency. So Previously, you had to be in Australia 180 days, and then you can if you're not in Australia for like say 185 days, then you can say you can have your tax residency somewhere else. They've now stopped that, so you can't be gallivanting about the world for 7 months of the year, but then predominantly own your principal place of residence, have a business, and have things that are tying you to Australia. The new residency that comes in on the 1st of July 26, or maybe the 1st of January 20, I think it's the first, well, it's next year, I'll confirm the date. It's 45 days. If you're in Australia more than 45 days, then the Australian government is going to claim that you are an Australian tax resident. So even if you spend 11 months of the year in Dubai trading crypto, if you're back here for 6 to 8 weeks of that year, then the Australian government will be having their hand out saying, no, we know that you live in Dubai, but you still own a property here in Australia, and your kids are in private school, your family is still based here. So you are Australian, and we will take our pound of tax from you. So you just need to keep, your accountant just need to, what are my favorite indicators? My favorite indicators are RSI, momentum, average true range. I use a lot, but that's more for like position sizing. MACD. Yeah, that's I don't, and it's like as simple as it is, like exponential moving averages. Yeah, that's what I do use, and I do use a VWAP a fair bit as well, which is a volume weighted average price. So I do also use that. I don't do a lot of discretionary trading. I do very little discretionary trading. I predominantly just build systems that do automated trading. So we have a whole lot of coding that goes into that. And so that's where I spend most of my time when I am looking at markets. All right, so on that note, I'm going to wrap up for this Tuesday evening. I hope you all had a great night and are not getting whipsawed too harshly in the markets at the moment. I'm going to be continuing to sort of sit on the sidelines for a little bit and just see if this ceasefire does actually go through and go from there. Karen, can you finish what you were saying about tax? I did finish. Which bit did you want more information about, Karen? Oh, so my end of the sentence was the Australian government will take its pound of flesh or its pound of tax, and then that was my ending on tax. Yeah, sorry. Around residency, yes, they've already legislated it. It's happening next year. No, 45 days. If you hear more than 45 days, then they're coming for you. It depends on how much you steal. It's a sliding scale. The more you steal, the longer you go to jail. Mate, the ATO is not somebody that you want to be messing around with. They have a long memory and they can go back 7 years. And in this crypto space that we play in, everything is on chain. So even though they might not necessarily know every single transaction that you do at the moment, once they figure out how to do that, which they will, then they can go back 7 years. And once all of the wallets are KYC'd, yeah, it's going to be very interesting to see how much additional tax revenue that the ATO is going to be coming after. All right, everybody, have a wonderful Tuesday evening. Good luck out there in the markets. Trade sensibly, trade profitably, and I'll catch up with you soon. If you watch this on YouTube, please like and subscribe, and there should be another video up here that you can check out. Good night, everybody.